Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top author on TradingView for many years, as well as being one of the only traders with a fully verified MyFX book track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump right into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about USDJPY. Now, as usual, to keep the video as educational as possible, first I'll give you the technical aspect for this market, then I'll move to the commitment of traders analysis to see what institutions in the market are doing and how they're moving and shifting their orders, and then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite significant monthly demand and support zone. From here, all these previous rejections to the upside were created. So every time the market was testing this zone, it reacted to the area with a strong push to the upside, fueled by strong institutional buying. And we will be looking at this institutional buying in just a few moments when we move to the commitment of traders analysis. And we can notice that just now we had yet another one of these tests of this historical demand and support zone, again followed by a reaction to the area and rejection to the upside, again fueled by strong institutional buying. So here on the monthly, everything looks quite bullish. It is quite clear. Let's keep that in mind and drop that on the weekly time frame. Now, from a weekly perspective, what we can notice is a perfect inversion of trend and structure. The market went from the creation of weekly lower lows and lower highs, so clearly a downtrend. We then had this triple bottom created at this zone. And then the market inverted to the creation of weekly higher highs and higher lows. So we had a perfect inversion of trend here. First, from a weekly bearish market to then having this triple bottom at the area and the inversion to a bullish market. So a textbook inversion of trend from a bearish to a bullish trend, with a triple bottom being the inversion pattern, which we have already noticed was right here. Now, if we have to identify this structure, what we can see is that this area was acting as quite important structure, acting as previous support here, turned resistance here and here, then the market broke back above that zone, and that previous resistance became support here, and again here. When the market was testing this support, it was loading up, so institutions were loading up their longs, and then this strong push to the upside followed. And by the way, I was speaking about USDJPY, if you remember, exactly when the market was at this area, explaining all the reasons for which I was expecting this rejection to the upside, which is in fact exactly what the market gave us. Just a quick interruption. Let me know in the comments below any new pairs or topics that you would like me to cover in my next videos, because I'm always open to suggestions. Dropping down the daily, what do we see? Now, here on the daily time frame, we can see that even more clearly. In fact, I was speaking about USDJPY exactly when the market was here, and I explained all the reasons for which I was expecting this impulse to the upside, and that is exactly what the market did. Then again, after this impulse and correction, when the market was testing this area, I explained all the reasons for which I was expecting a new push to the upside. And in the very last analysis, when the market was creating this push to the upside, I explained all the reasons for which I was expecting the market to reach this area right here, which was a strong historical supply and resistance zone. And then the market, I was expecting from here a rejection to the downside. And the market again respected exactly what we wanted to see. So far, the market has been behaving exactly as you would expect in situations like this. And by the way, I will link in description all three these previous analysis, so you can go and check them out for more free education. Now, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing. Now, if we look at the data for the JPY, we have to keep in mind that we are already looking at JPY USD, because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been rapidly decreasing, which means that institutions have been moving back to the bearish side for the JPY. And if institutions are shorting the JPY, they are longing USDJPY, because obviously if institutions are selling the JPY and the JPY is traded against the USD, they are longing USDJPY. That is exactly what has been going on with the previous report, 9.4K shorts added on the JPY and 8.5K longs getting closed, another 6.5K shorts opened with the last report and 8.6 longs getting closed, which means that institutions are longing the USDJPY and closing shorts on USDJPY because they are shorting the JPY and closing longs on the JPY. Pretty basic stuff. So let's keep all of this in mind, that institutions are longing USDJPY, and let's move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you'll find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, it comes as no surprise that all this massive push to the upside was created, because this comes with all the institutional buying of USDJPY. So what we can notice here is that we just had a new impulse to the upside and now the start of this correction. Now, after the impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg, which shows us how we have the 0.32 50% and 0.618 Fibonacci retracements lining up exactly inside of this area. Now, this creates confluence of demand and support inside of this zone. Institutions are having orders to buy inside of this area since they're already buying. That is definitely a good probability thing. So this means that if the market will provide a deceleration inside of this zone, there is a possibility for a new impulse to the upside, for a deeper test of the supply and resistance that we have inside of this zone, which we identified in our previous analysis. So in a situation like this, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, if the market would shift inside of this area from an intraday bearish to a bullish market, I wouldn't be surprised to see a new impulse to the upside fueled by new institutional buying. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis, and you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education. And I will see you in my next video.